You're either going to hate me or love me for this video because we're talking about a bubble that has bursted with the retail diamond hand, dare I say, investors that exist out there. And if you are part of that landscape, you have been decimated off the entire stock exchange. Whereas if you've kind of had some value sense within the market, you're part of our chat groups, we have these daily discussions, you've probably been doing relatively okay, maybe not experiencing these 80% declines that we are about to see. I'm going to be talking about where you should be paying attention, where money is actually going to, and what new trends are emerging within the market. Because unfortunately, as much as people are going to drill to you that this entire market sell-off, which by the way, if you're in index funds, it's barely been a blimp on the radar, but if you've been a part of the sell-off, God knows people are telling you it's going to be inflation, interest rates, the Federal Reserve, the money printing, and none of that in this current market cycle has been correlated to the sell-off that we've recently seen. And that's what I want to talk about here. If that interests you, consider hitting that like button, because none of this could have came into awareness without this retrospective view and looking back on what we just witnessed to learn from perhaps some of our mistakes to adjust moving forward here, folks. So first and foremost, I'm going to pull up some charts here because I can't get over that time period when there were so many viewers on YouTube watching all of these different live streams, the Dogecoin millionaire, and everyone telling you to diamond hand your way into financial ruin because the Dogecoin millionaire ain't a millionaire anymore. Newsflash, folks, sometimes taking profit is prevalent. And I mean, I got into this game and I got out of this game at a very good time. All of the charts we're about to see almost look exactly the same because it was done through this time period of obviously coming through the 2020 crash, leading into this major hype of 2021, followed by a wicked sell-off. GameStop, I mean, a premier diamond handing company, guys, down 66.8%. Not happy about that now if you're still diamond handing that. AMC, another great example, down 68.48%. But let's talk about maybe some of the more SPAC spectrum. Remember how big SPACs were in March 2020? You remember how rich Chamath Palihapitiya made off all those 20% commissions, bringing things like Virgin Galactic to the public eye, which also absolutely decimated. But Nikola, I mean, this guy's going to be going to court soon. This company's still trying to revitalize their business. It's not going anywhere, but the stock's destroyed. And the cool thing about these companies right now, guys, is think about how much money they made off idiots. You don't think they diluted the living hell out of your life, put all that cash into the bank, and now have a runway that's going to last them years? You know how hard that is to replicate in this market for new businesses that are trying to fund capital? It's nothing like it was even a short year ago. But look at these charts, guys. They're all going to be kind of starting in the midst of 2020, getting slaughtered into 2021, and then just this wicked continued sell-off. I mean, this 2-year cycle has been absolutely mind-boggling. And Buffett is true, man. When you're taxi driving your neighbor's kids, telling you how to make millions of dollars in the NFT, crypto, and SPAC, and small cap, and GME diamond handing holding markets, it's probably a good sign to get the F out, man. And I did. I mean, I held some stocks like MindMed that I still think a lot of these companies are great, guys. I think MindMed's still a forefronting industry, but god damn, sometimes you got to recognize, you know, when you're in a bubbled market and if you're up a lot, I mean, take profits. And if you're buying the all-time highs, make sure you're mitigating that exposure. Right? That's why I always tell you guys, risk tolerance, only invest what you're willing to lose, and make sure you're at least allocating some money to the path of least resistance of return, right? Which is those large caps, which are kind of selling off, which we'll talk about. But Highly on, guys, down 90%. I mean, Wish, Context Logic here, another one of these kind of meme stocks, down 89% from the high in the last year here since they kind of IPO'd. I mean, take a look at Tattooed Chef, some more of these big name brand companies peaking again in the midst of 2020, down 50%. Enphase, this one only recently sold off, a 50% drop, guys. Let's get into some of these large caps. One of Canada's largest companies, no longer, no more. I mean, we were talking about Shopify, guys, down 40% almost from these highs, continuing to hit new lows. That's the real painful part, right? I was talking with a lot of CEOs today in my other job, just discussing how, like, who is selling at these bottoms? Like, you think Warren Buffett's not diamond handing BABA and what he believes in and cost averaging down? That's what a real investor should be doing here. But most of you guys, and you don't talk about this because I know you don't, because you're too scared to talk about how much money you just lost. Because why don't we hear more about these people that are accounts have just blown up? I mean, look at Square, down 53%, guys. These are where the buying opportunities start coming in. This is where if you're interested in small caps that took all of your money, diluting you into the ground, have a real runway ahead of them. And this is where you're going to get those dead basement barrel bottom prices to kind of propel yourself into what could be a new wave. But that's only if you're finding the right companies here. I'm going to talk about what the right ones are, but let's look at a few more of these. PayPal, guys, I hate this company, but down 43%, not really deserved for the growth company in the large cap. This is a $200 billion company that's down 43%. If you told me this was going to happen to PayPal, I wouldn't have believed you. Zoom, maybe a little bit more believable. You know, this is kind of more of like those pandemic plays. I mean, this thing is down 71%, again, peaking in the midst of 2020 in the environment of that retail investing audience. I mean, look at Roblox. This one only recently sold off, and this is a big favorite in the metaverse, down 43%. And again, Dogecoin, guys, Dogecoin is not a millionaire anymore. I mean, this thing is down 73%. And why do I keep saying this is the retail bubble bursting? Because Google Trends is your friends. I mean, go to Google Trends, guys. I live on here. I live through website, YouTube, all this data and analytics that is very prevalent to people buying individual stocks, because this shows you where the interest of the internet is going, where money is flooding to, and Robinhood being a prime candidate for the retail audience in the peak of 2020. And stocks, just people generally searching stocks, guys, these charts look exactly the same to almost everything we just looked at. Look at this. Look at this. In the midst of 2020, everything peaked. And all of these charts look, this isn't even a stock. This is just search data. And it looks exactly like all of these stocks. I mean, I could pick anyone. Look at Nikola. That looks the exact same, doesn't it? I mean, you could go through so many of these guys. Tattooed Chef looks exactly the same here. And obviously the large caps have sold off a little bit more cyclically in different time periods. But I mean, it's kind of reminiscent to, and crazy to think that the trend is truly your friend. And it doesn't take a lot of sense to look into this data. That's why I take profits on things like MyMed when they were peaking back then, guys. And I'm hoping you guys were able to get out with some good gains and diversify your future, retirement. And if you're in these stocks and you're interested in these stocks, this is the time to look. Now, first and foremost, you're going to hate me for this because I know a lot of you guys look at these small caps and you think they're basement bottom prices, but I'm going to tell you this is where real pain is going to be experienced. And Micron is the only example I keep coming back to as the best example of nobody cares how good your company is. Until you start proving news flow and getting it in front of the eyeballs of, hey, this is a real company that's growing, that's locking in a lot of attention, and they're doing the right things from every front, because it's not just doing the right things, it's doing the right media, it's doing the right PR. It's there's so much that encapsulates a stock price going up that people keep forgetting. There's no reason stocks should go up. There's no reason for it unless people are buying. That's the only reason, guys. And take a look at Micron. The reason I love this example is because if you went back to the dot-com bubble and told somebody Micron Technologies would be making like 10, 20 times the revenue, just busting out EPS numbers that you still wouldn't be at all-time highs, over 20 years later, no one would have believed you, right? So I feel like we just watched this bubble burst. All of the retail audience, all these retail eyeballs, all of the small investors that pumped GME to the moon and Dogecoin have now finally lost their shirts. They've left the market, and the only money left is the institutional guy in the retail that is a long-term cost average investor, and it is such a shame. This is what has to happen to most people, and they don't learn. They just pull their money out of the markets, and now to them this is a scam. They don't want to be involved anymore. It's too out of control for them because they didn't understand the path of least resistance to wealth and what a fundamental company looks like, because there's a big difference between companies that don't show EBITDA, guys, and I hate to say it, but almost all the ones we just looked at, a lot of them anyways, outside of a few of those, whether we're talking Shopify or Square, whatever, a lot of these guys ain't showing positive EBITDA numbers, guys. And when that is in existence, that means you have a likelihood of going bankrupt in the future. You know what's not bankrupting? Apple, Facebook, Amazon. They ain't bankrupting. If those things drop in half, I know for a fact that in the future they ain't going to be bankrupt. So I'm not nearly as concerned about it, but I don't think people take that stuff into consideration when they kind of got into the hype of this stock explosion, right? So what is performing well right now? Where do I think money is going in the future? Well, we've talked about this a lot, guys. There's a lot of fear in the market. I don't think any of it's really that just, because again, does Facebook fundamentals change in the midst of hyperinflation and interest raising environments? Hell no, it doesn't, but the stock's still going to sell off because of the way people think about the market. So where's money moving to? Well, honestly, guys, commodities. I think commodities are going to be really big this year. I mean, we've got gold already trading up this year. Silver is already trading up as well. I feel like in the midst of this scarier kind of Federal Reserve based environment that we're going to see commodities, uranium, obviously those lithium, graphite, nickel exploration companies, and a lot of them now, even the small cap ones, have started to bump up pretty rapidly. I've noticed this year, some are trading up 30+%. I mean, a lot of people are shifting over into the value plays, the banks. Look at the bank trends from the midst of 2020 here, guys. They did not peak. They did not follow the diamond hand investor. They didn't get any of the retail eyeballs. But if you were able to hold on and not get too caught up in the bubbly, market that was small caps, I mean, look at its exact opposite chart of all the stocks we just looked at. It's just, Royal Bank, all-time highs here. I mean, look at Bank of America, guys. Yeah, it sold off slightly after the earnings report from JP Morgan, and, slight disappointing, but really not that bad of numbers. The exact opposite chart here. I mean, the way these companies trade is nothing like all these other ones. I mean, take a look at oil, for example. I don't like oil personally. I have a hard time buying commodities just out of personal preference because they're very volatile. I do own some for cash flow, obviously through my utilities, like for example, Algonquin Power has a lot of exposure to, say, natural gas. And look at these charts, guys. I mean, in the midst of 2020, when all those things were peaking and these things were bottoming out, they're the exact inverse charts right now. And they're performing great. Healthcare. I mean, look at healthcare. Yeah, again, a little bit of a sell-off here in the last little bit of the beginning of the year, but exact inverse chart. And you know what? What's really going to move the market now, guys, unfortunately, with big money hedgies left behind, a lot of millionaires and those higher long-term investing retail investors, their money is going to go where news flow and interest goes, and it's going to be incremental. It's not going to be as astronomical as it was. And if there's one good example that recently came out, guys, Activision Blizzard. Activision, prime example, you know, kind of peaking in 2020 going to 2021, went through that retail sell-off, even though it's a large cap, a little bit more cushion, similar to your Shopify and your Squares of the world. But we get a little bit of hint of news flow on this company, a little sign of a glimpse of hope, and boom, the stock jumps 43%. I think it's highly unlikely we're going to see that happen with smaller caps coming into this year. And I think if you do own those smaller caps right now, guys, you're gonna have to take a big breath, stomach what a long-term investor truly has to do, look 5-10 years out, and pray to God that these companies are able to execute on their missions and their goals to getting to profitability. Because if they don't, they only have so much runway, which again, thanks to the idiot diamond handlers, gave them a shit ton of cash. Those diamond handlers bailed out, and yeah, the stocks are down, but those guys are cash rich right now. So they've got decent runway, which leads me to tell you this is the time to perhaps be looking for some more risk on investments. Now, personally for me, guys, what I keep telling you is I'm waiting for a cyclical turnaround when I can really truly see that, you know, there's more eyeballs coming into those sectors. We see some trend shifting. Maybe we start seeing these large caps sell off a little bit, and then we start seeing people with cash trying to find places to put that money. And where do they go? Well, where the best growth is at the best deals. And that's, again, you're looking at some of these larger cap things like Square, maybe like Shopify, maybe even dabbling down into those really robust small cap businesses that came out of the SPAC industry, that maybe came out of these diamond handing companies, guys, because this is where you're going to have those opportunities to make an extensive amount of wealth. This is what Cathie Wood keeps talking about. But what Cathie Wood doesn't want to tell you guys is that there is nobody buying into these markets right now. And the worst thing about it is if interest rates go up, I really feel like there is no reason for small caps to continue to come up at all. I mean, the fact of the matter is if more money's getting drawn out of the market, more people have to pay higher interest. It's going to cool down the real estate market. People are going to have less capital. They're going to be paying higher interest rates, and people are just not going to be funneling money or being nearly as concerned into the smaller cap sector, which comes back to the point we've seen massive sell-offs after 10, 20, $30 billion run-ups in companies. And just like Micron, there is no reason for the next 20 years that those stocks should rebound. As much as you can sit there, pray, hope, beat your head against the wall, these are just raw, bloody facts. This is why value investing should always be a proponent of your portfolio. Large caps, companies that can't bankrupt, because damn, at least if you know you're going to flatline or go down for the next 4 or 5 years, there's no hope in hell that you're going to bankrupt, and you're going to at least have some cash flow and some dividends to consider cost averaging in and taking on some of those riskier investments. Now, I'm not a financial advisor. Don't take this as financial advice. Life is always, you know, looking backwards. And this is why you can take what you're looking at right here and you could easily put this into so many different facets of the markets right now. This is why I think these learning lessons are prevalent for people that want to succeed, because you can take this, what I'm showing you here, and you could pinpoint this down into the NFT market right now. NFTs are still nuttered. You're not going to tell me right now that the NFTs aren't in a bubble, that crypto, as most of it is sold off in this bubble bursting, still doesn't have a lot of selling off to have happened when, again, most people in these markets, especially the crypto markets, guys, are people that made way too much money, that already own crypto, and all of the retail audience, because there ain't one institutional dollar right now outside of maybe Bitcoin, Ethereum, and a few other exceptions that isn't 100% retail based. So I found this to be a very intriguing and fun conversation to be had, because I haven't heard one person on CNBC. I noticed Jeremy at Financial Education, some of these other really savvy YouTubers pointing out this trend data, yet no mainstream person is sitting here telling you this shit. And honestly, guys, I hope you're not the person selling the bottoms. If you bought into these things with those high convictions and you're down 50, 80%, this is where you need to be like Buffett. This is where true diamond handlers come into play. If you believe in that company and your conviction remains the same, buy the bottoms. This isn't a time to tax loss harvest your way into blowing your accounts up. Some of you have. I wish there were more people out there actually showing the accounts that have blown up, because I guarantee you this is why Robinhood stock is getting slaughtered right now. But like I said, you're either going to hate me or love me for this video, but I'd love to know what you think in that comment section below, and what kind of stocks that interest you, and you know, what kind of trends you're seeing out there. So stay cool, stay awesome, and I look forward to catching you in the next one.